Welcome to a new episode of DT Vector, the podcast where we explore the people, technologies, financing, and ideas that are shaping the future of the built world. I'm Eugen Ursu, your host, and today I'm joined by Stephen MacDonald. He's a founder and CEO of PropTech Connection, a global PropTech advisory firm positioned itself as a bridge between real estate and technology. Welcome, Stephen, to our show.
Thank you, Eugene. Thank you very much for having us.
So I know you have quite an interesting professional background from audit, real estate, venture capital, and now in global PropTech advisory. Can you tell your story about your background? How did you end founding this company?
Sure. When I was very young, I went out of university and went to PricewaterhouseCoopers, did my finance, chartered accountancy for 3 years, then went into venture capital. There was what we'd call now clean tech, but it was wave technology. It was dynamic building materials, energy storage. So it's what is now, well, the ESG has become such a major thing, but back then it was quite early. So that was in the late 2000s. Then moved to Australia, worked for a large real estate company, mainly on the strategic side in terms of capital transactions, working on the numbers there, or how we can build things better, mainly within residential, but great exposure to every sector. It was a multi-sector REIT that I worked for. And then led the investments as the investment director for the largest PropTech fund at the time. I think it was Asia, but based here in Australia. And then Ivo and I co-founded the PropTech Connection about 6 years ago. And the reason we did that is we felt there was a gap in the market between people seeking to understand what's going on and in terms of globally, what lessons can be learned, but also there was so many companies out there. There's often a need for a partner to help them understand who the best partner for that company was in the real estate space. So a real estate construction company was seeking to use tech. How did they know which company was the best for them? And from there, we've gone from strength to strength. We help prop tech companies, we help real estate companies, we help venture capital funds source deals. We do a lot of published research, things along that way. So hopefully that summarizes the point.
Can you remember, let's say, the first interaction with the, let's say, technology from real estate? And you've said that is the future for sure. That's where the industry is going, and there is where you want it to be.
My very first deal in venture capital was a dynamic insulation play. And I'm not an architect or an engineer, but we were investing in a spin out from a university in Scotland. And all I can really remember from it was it would save 4% of the floor space. So you're able to get a 4% greater yield on land. And it did some pretty good things with the heat and the cooling within a building, so residential. And that was 18, 19 years ago. So we're still trying to solve some of these problems, but I think then when you could see the capability or the opportunity, both financially, but also the impacts, whether that be CO2 or whether that be waste, but also from a financial perspective, that was when I first realized the opportunity within the building sectors, just construction, but also for things that are built, but not just at the European level, which is I was working at, but at a global level also. So that was about 18, 19 years ago.
How did you started the company? How did that begin? You said you have a co-founder, and tell a little bit about that story.
It's very much stemmed from the fact that everyone still, and I think it's still to an extent, like prop tech has evolved in terms of what it means. It encompasses more things now. It encompasses things like clean tech. People call it built environment technology. Some are focusing on the humanistic side of it, but because of the terminology for a start, but also the number of techs, but also if you look at the Middle East, they're running very hard on certain aspects of the tech. America's leading in certain aspects, particularly in residential. So if you look at what they tried to do with the MLSs, what we realized is there was a lot of value in what we had, which was that global insight and that global ability to be like, if you want to do 3D printing, this is the leaders in the space, this is what they learned, this is what they built, this is a leading tech. But you needed that global lens to really help companies go deep using technology. Because I think when we first started, people were kind of just trying things, it wasn't working. And we saw that as an opportunity if someone with advice could actually go that next level and actually have full scale implementation of that technology. So that was one thing, was that ability to bring about a global lens. We also then built the biggest, we think, market intelligence platform in PropTech or real estate technology. We've got 19,000 technologies, over 2,000 funds, and at least 3 or 4,000, I think, real estate companies. And we've mapped out their kind of needs, sectors, what they're doing. And that gives us a kind of data to support our assumptions when we're advising clients. And that's what people needed, was the kind of, how do you bring this all together? And how do you give me comfort that the thing I'm going to do, technology and real estate, is real or gives me an ROI? And that's why we set up the business to give people that opportunity. Because it was very much just, let's just try this little solution, or let's try this, or let's try big. But there was no opportunity for them to get market validation from an independent source, which is what we are.
Let's put it like that. What's the unique selling proposition in this case? Why is a PropTech startup or is coming to you, or real estate developer coming to
So if
you?
you look at, so I've only really talked about the real estate side, but we also do help a number of the growing techs. Obviously, with our, like, we've all come from a venture capital type background, so we understand the space. And one of the things that we do when we help the tech companies is we can help summarize the key points that they should be hitting when they're speaking to venture capital funds. Number one. Number two, we can actually get them in front of the right VC funds. Now, a lot of the VC funds, and I understand why, they give quite a wide thesis into what they're investing in, but it makes it quite hard to discern whether that's relevant for you as a tech. And because we've been doing this a long time, with a number of relationships, we spend a lot of time with the VCs and CVCs and private equity. What we're able to do is help the tech actually say, here's your cohort of people you should be targeting. This is the types of things they're looking at. You're a good fit because of this. And then help them structure that in a way that gets them really quite advanced with these potential investors. So that's how we help the technology companies, for example.
A lot of people are telling it's a lot of noise. We don't know, even from VCs that are looking into the specs. I don't know what it is more technical. Okay, I'm looking at the founders. I'm looking at the problems they want to resolve, but I don't know if they will gonna do it. And there are a lot of different solutions that are doing very specific things. How, let's put it like that. Let's put in two questions. How a VC should navigate when looking in what should invest, where they are looking, and what should they do differently?
I think the lot of noise thing is fair. I think we say there's 19,000 companies. And if you look at construction, for example, there's 6 to 8,000 companies, tech companies. So naturally, a lot of them are doing the same thing. And they suggest that. And if you look at even 2-3 years ago, a lot of the techs, not just in construction, but a lot of techs was basically just a front end. And it was a nice tool and it was a way you could use tech, but it didn't actually drive them much value. I think what we're seeing VCs invest at the moment is either things that's able to take direct from source data, highly structured and highly valuable data at source. So if you imagine something like QA apps in construction, you're actually getting the data live, real-time data live, and that's highly valuable for a number of streams upstream. So financing, decision-making, portfolio risk, whatever it might be. And I think the second one then is in large markets, and you need a large market because the only unicorns really in PropTech have been in the US, China, and maybe one or two places like Indonesia and India. But these large markets that already have a natural network. And that's where the ones, particularly things like office, have done quite well because they have that existing base. And then also the third one I would say is going back to construction is ones that's actually able to deliver very clear ROI. And I think you're seeing the VCs align that way, as where they don't have to take as much risk as I think they did before. And once you start to look at it that way, you actually filter out quite a lot of those companies that I mentioned. And that's what the VCs are doing, I think.
So we can tell that VCs are learning about BIM, building information modeling, as well, from the construction processes and so on. It's that a trend that you're seeing?
BIM for sure. I think you're seeing a number of things with BIM. I think you're seeing people try pilots, particularly 4th level and 5th level, but obviously to actually implement BIM properly it's quite an organizational change. right? You need to get the standards in, you need to get the codification in, you need to ensure there's capability within the team. The benefits are there to see, but whether people will invest that kind of money, especially if they have old portfolios to do it, is probably the challenge. But you are seeing a lot of people investing in the leaders in that space, particularly when you start to overlay some AI, because the benefits of BIM are very clear. It's just whether people can ride the initial setup costs. But more and more people are, because obviously the benefits are very good with BIM once it gets going.
Before you're recommending any solutions, you're probably running a deep discovery process. What are you typically trying to uncover at the first stage?
Good question. About lots of things. We look at prior initiatives. We look at how they want to adopt. They look at certain criteria they'll be looking for from the technology. So some of our clients, for example, will require headquarters or presence in their region. So say you're based in Asia and you want to go global, you might say, I'll only look at a company that has an office in Tokyo or Hong Kong or wherever, or has a customer there. So we look at a number of factors, but again, that talks to the 19,000. It's some of those factors that then help us shape which of the 19,000s the client should be looking at, but also helps us guide them on realism. You can't say you want to spend $100,000 and then roll out something like BIM capacity across 90 projects. And that's where we kind of help guide and give global examples of what's realistic and what's happening to help guide some of that stuff that still needs to be figured out from the client side.
If you're looking globally, and can you tell us a little, some stories about how different regions are usually adopting a solution, or let's put it like that, to do business in this space? I don't know how Asia is approaching this, how Europe and how US is approaching this adoption.
Yeah, it's a big question. I think you've got to look at the drivers, right? I think maybe rather than the adoption, I think, so if you look at Europe, for example, the European Union is a big driver on ESG initiatives, but you've also got things like the Norwegian Sovereign Wealth Fund, which is mandating certain things of its owners. So you look at the kind of regional drivers. So you're seeing quite a lot of, or you did see a lot of, particularly in that building management space, you saw a lot of good technologies around thermal comfort, energy usage, etc. And then you're also seeing it around that circular economy world as well. I think America, from an adoption point of view, you're seeing a lot of them going into modern methods of construction or advanced methods of construction. Again, trying to find that, and the driver for that's affordability and scale. But they're also, I would say, very focused on costs. If it's anything cost saving, they're very strong on that. I think if you look at the Middle East from an adoption perspective, they have a range of ways they're attacking. Sometimes they want the most advanced tech to try something new, but they're also very big on, because a lot of their things are coming from new. They're building a lot of mixed use precincts, which require a lot of technology. So they actually want stacks where maybe in the US it's more singular, and the Middle East, because they're building maybe large mixed use precincts or things from scratch. They're looking at a whole suite of technology. And then in the Middle East, and then in Asia, I would say that particularly, so if you look at, I think the human robot index is an index which measures the interaction between the two. I think it's Japan and South Korea and Germany are the top three, Japan and South Korea being 1 and 2. So they're very open to automated ways of working, probably more so than other parts of the world. And you can see that in some of the techs that they're looking to adopt, things like haptic devices maybe, but also small SMRs from a modular reactor perspective, but also in hybrid data centers, things like that. So it depends on the kind of local drivers rather than specific regions how they adopt, but hopefully that gives you a bit of a flavor.
You've said that you have 19,000 prop tech and construction tech companies globally. What patterns stand out when you look at the data?
I think over time, we've done this for a while now, I think over time you're definitely seeing a greater alignment of the hero statements of the companies with real estate metrics. I think you start to see patterns like, well, we're ESG, we're AI, we're this. You can kind of see the kind of marketing trends flow through in their analysis and what their claims are as well. But I think what you're seeing is the successful older ones, you can start to see the natural progression over sectors. So they might have started in hotels, they'll then do build to rent or / multifamily. They'll then look at student accommodation. and then maybe aged care. So you can start to see that diversification. It is one thing I would say that's quite clear as companies get older is that natural, how can I reuse this in a different sector? But a lot of the time you've got to really focus on that first sector before you get enough money to be able to go to the next ones.
And looking back at the past question about the how the conversation different globally, what do you think is the best approach? Who is, let's say, winning this game? Is US looking at the technology scale and cost saving, or Asia that is looking to automate things, or Europe that is focusing on ECG?
It depends how you measure winning. How would you measure winning?
I don't know from your perspective. Okay, let's measure winning in the what space globally will have. Let's say in if we're looking in 10 years time frame into the future, who will have a, let's say, digital twin frame or autonomous digital twin
Autonomous
framework?
digital wolf.
Put it like that.
I think the natural place to look at it is those doing large scale construction from fresh. So that's naturally the Middle East. So Saudi's got 13 gigas. You've got Expo City in Dubai doing, as an example, the one in Dubai. And the UAE's got tons of examples as well. Oman's got its own smart city that it's building out. So they're building things from scratch. So they have that ability now to put in the right infrastructure for, say, the use of BIM technology or in live data capturing through drones or whatever it may be, enterprise vision, whatever it is. So because they're able to build it now, in 10 years' time, that's when you can start to reap the benefits, right? Because I think part of the challenge with Europe and maybe US is that they've already got a lot of infrastructure in place, where the Middle East is actually is right at the forefront of that because it's all from new. So if you're looking at 10 years' time, then that's probably going to be them. And a lot of the ROI from these projects, if you are setting up a digital twin or whatever, it doesn't come for 3-4 years with a real ROI. So it's probably them as the areas I would say that are going to be the ones to look for in terms of winning or seeing the return, if you like.
Yeah, that's good perspective from, and we've seen this pattern in the past also in adopting technologies. If we're looking at what's happening globally and in industry conferences and fairs and so on, many real estate companies talk about digital transformation. Yet adoption often stalls for sure. From your experience, what does make this gap persist?
I think there's a number of reasons. I think you've got to take conferences are quite an interesting thing, right? Because everyone gets their 5 minutes to say something, and there's obviously a lot of nuance and depth to it, right? And I think so. Obviously, when companies say they're doing things, obviously a lot of it is, but they're also quite conservative beasts. A lot of the large REITs, which is completely understandable. But at the heart, they're transactional beasts, right? So if someone's going to cost an extra $500 a square meter or $100 a square meter, then they need to see an ROI on that. And some of the techs isn't giving them that ROI yet. So they might be looking at digital transformation, and most of them are, but some of them are still figuring out their data and where the value lies. But I think it's once they start to see the ROI come through is where you'll see that take-up rate come. So I think there's a desire there, but they've maybe not had the results yet, which is probably why some of them are we just stalled a little bit in terms of that speed and momentum.
From the PropTech side, from the software developers, from the implementer side, it's a matter of they don't know how to explain, to show the ROI, or do we need more development into the software solution, AI things that are developed?
I think on the software side, I think we've got beyond I think there was a thing before where people would build themselves, like some of the REITs. I think we're beyond that, but you've got to look at the kind of myriad of relationships, right? So if you look at construction, you've got GC, subcontractors, project sponsors, separate surveyors, you've got construction hire, whatever. That's just in construction. On the asset management side, you've got leasing agents, you've got facility managers, which might be outsourced, all that kind of stuff. And that's the challenge you have with PropTech, is that you've got to satisfy so many people. And then it's who pays for it. So I don't think it's necessarily software development. It's just finding a way to ensure everyone's got visibility of the value. And I think when that happens, that's when the techs are successful on the asset management side.
Looking into last years, can you remember and share a concrete example where PropTech solution delivered helped a lot the client with operational or financial value? Or if you can relate some strong use cases that really helped an client in the end?
I think one of the ones that we looked at was advanced methods of construction. And it's still quite in its early phases, but the numbers are quite startling around. It was more health and safety incidents, right? And it was that ability to do modular offsite, and then the impact in terms of delivery times, but also, as I say, health and safety. There was less rework. And I can't remember the stats at the top of my head because it was a few months ago, but that was one area that we actually saw quick tangible results quite quickly. But it's a significant investment because there's a lot of time to select and whatever, and then to actually do that, you've got to select a project. But you could see the results quite quickly once you went to build mode that it came through.
From your perspective, which technologies do you think are currently oversold and which ones are underestimated by the market?
I think, and you're seeing it, I think disrupting residential agents was the thing that everyone tried to do for a while, I would say. I think that's now really coming off. I think that's a hard market. There is good angles. I'm not saying it's all, but it is a hard market. And you can see that with the listed guys in the US as well. The valuations have come down a bit. I think the people that are able to, as I said to you before, source data at a source level, particularly say in construction at a subcontractor level. But if you're able to get that data of a building and capture that, be your single source of truth all the way through to completion and then handover, I think that's going to be very valuable. And once you have that process very tight, then the use of AI, etc., will just turbocharge that value. And I think that's where a lot of the money and a lot of the value will be in PropTech in the next couple of years.
And how should real estate developer, okay, let's say they are saying, I want to use that, I want to have this strategy. Maybe they don't have a strategy on paper, to put it like that, or communicated. But they're saying, I want to start. What to start first? What is your recommendation to start? Okay, maybe in 5 years they have patience to go through the process. But in 5 years they want some, let's say, big results. What's your recommendation for them? How to approach it?
But if they were starting, though, I think wanted to do it internally without help from people like us, I think you've got to identify your pain points, right? You've got to identify where you think you have issues. And then you go through the process and basically identify how tech can solve that, right? So if you are feeling like you're spending too much on construction materials, or the users of your building aren't as satisfied as they should be in this effective retention rates, as why is that happening? And then once you do that, you then start to look at what techs can help you. And that's part of how we do our process as well.
One concern, maybe it's not told, but from the real estate developers, from what I've seen, they're saying, okay, but I don't want to be captive in one or two solutions, and I'll put all the energy, all the information, all the data in that, and in the end I don't know if they will be in the next years. How should they approach this potential problem or potential liability?
Yeah, I think it's a fair, and a lot of people, and this is what I said before, I said it's a transactional business, right? So I know that a lot of developers now, once they've been through some of the journey, get it, you have to spend to realize. But then there's also learnings from doing things like pilots or smaller research projects or collaborations, just to kind of learn how the company you work, in terms of whether it's feasible from your setup, but then also whether the technology is capable of helping you. But it doesn't need to be a massive rollout day one. There's a lot of like mini trials or pilots, as I say, but there's also got to be a realization from all involved that there's a commitment, and there'll probably be some cost initially. but that should pay itself back once you start to realize the benefit.
Do you see, okay, we've talked about what's happening in different regions of the world, but how do you see the adoption in different asset classes?
I know it's not an asset class, but construction is one, I think, partly because of the path to cash, right? So you've got so many developers, particularly places like Australia and the US, where you can get quite quick benefits and you can also trial things quite a lot. But also once you start that process and you roll it up into portfolio views or even government body views, the small benefits, so percentage benefits or BIPs become really important, right? And particularly if you're doing things like supply chain surety or you're looking at broader ESG policies with government, those things become really important. So construction, definitely. I think office, I think you're moving away from what was kind of like, as I say, thermal comfort, meeting room apps, access control. I think they're still important, but I think where the value is actually going to be is things around cybersecurity, space tracking and utilization and flexibility. So it's kind of scenario planning with office buildings, and probably if we go back a stage for all of them, that flexibility and design is an area, and we're seeing that from an investment perspective, that design area before you even start construction of a building is a big area. So I think design, the D&C, so design and construction, and then office, but more around that flexibility and how you use up the space within office, I think could be the key.
As you said, the drivers are going industry, are leading industry to adoption. And how do you see, because there are a lot of money in data centers or maybe energy, can maybe adoption of technology for these asset classes, for this industry, that can help even the presidential office or other sectors that are slightly behind?
Yeah, we've done a lot of work in data centers. We like the space. We see a lot of people looking not just at the asset, but the adjuncts. So being the energy provider, being the kind of cable, the fiber optics, the telco provider, if you like, and then also how you integrate renewable energy generation with natural energy generation and that feedback with the grid. So that energy space, as I say, I think, and going back to say office, I think what you'll start to see, I think what data centers won't just be hyperscalers and enterprise centers. It'll be probably a series of edge ones, which will come back into grade B, grade C, then potentially grade A office in major city CBDs. So I think that will help that sector in terms of you start to have floors, which will be cyber secure, it'll be very fast, it'll deal with latency, it'll also have AI processing. So that's one example where I think data centers may help that sector. So office, I think it will also help retail as well. You can't have too many levels, if levels at all within data centers, and retail is actually a perfect example of that because it's very wide often. So they could be turned in or part turned into mini AI data centers with AI processing capability, which will then improve the hubs around it with things like latency and cyber, as I say. I think data centers could help a number of the sectors and lift them up in terms of making more mixed use.
Do you invest in PropTech startups?
No. So that's one of the things this was the other thing we noticed when we set up is that you had to be independent. Because there's a lot of people offering, oh, you should speak to this company, you should speak to this company, you should speak to this company, but have a vested interest. Or there was when we set up. For us, it's important. We're very independent. So we give a recommendation based on what the client's needs are as opposed to investments we have.
So the best solution for the client, where the client is getting the better ROI in the end. Do you see a niche that isn't explored right now from PropTech standpoint?
No, I still think the data center space has got a little to go. I think basically with it, the data center space, there's definitely elements within it where people are targeting it from a very big perspective. So there's a lot of money, a lot of the startups, huge funding. But I still think there's little gaps that they can go into within that. And I think the second piece is around that transaction distribution for residential primarily, but also things like office leasing. You can see people actually building adjuncts to that to help, whether it's real estate companies or whether it's mortgage brokers, actually have a pipeline of deals. And I still think that's very fragmented at the moment. And I think there's an opportunity there for people to aggregate and consolidate that kind of space of services, of compliance services around the transaction and make some money that way.
And looking ahead, maybe in 5, 10 years, how do you see the relationship between real estate and technology changing?
Things, the technology change. I think you've got to remember, like a lot of them said at the start of it, or a couple of minutes ago, a lot of the data structuring and governance wasn't there. So it's only in the last 2, 3, 4 years that's been unleashed. And then obviously you've got AI potential capability on top of that. And I think you're going to start to see people actually use it in a way from an ROI perspective. I think you're going to see it change a lot. I think previously it was we're going to try and do something, everyone's doing something within this tech thing, and a lot of lessons have been learned. Where now I think people are much more aligned to how do we get ROI, what's the best process, what's the best way to do this, how do we learn from other countries, how do we learn from before, and it'll become a much greater part of how we build, but also how we manage, but also how we use buildings.
And do you expect tools like AI, BIM, digital twins to become a standard? When do you think will become a standard? If yes,
Yeah, I think it will. And I think if I knew, I'd be a very smart man. I think, but I don't know exactly when. But definitely the propensity or frequency of us seeing that as a requirement or something that people are looking at is definitely on the increase in the last 18 months, definitely, which suggests that it will be a mainstay in the next 3, 4, 5 years. But as I say, it's just getting that structuring right at the start to make it work. It's getting people over that journey.
do you think AI will be autonomous in the end?
I think its use cases are overstated at the moment. But I think if you have a very good data set of valuable, which can give you great analysis on your projects or your assets or your portfolio, and that's what I was saying about the source of data, and you apply AI there, you can get things quite autonomous and get really high value there. I think that top-down approach of scraping everything and then trying to make it work that way, I don't think the economics work. I don't think it gives you the right analysis, and that's where you're going to have completely autonomous AI. I think that's not going to happen. But that bottom-up approach, wherever you are within the life cycle, if you get your data right, then there's an opportunity, a high opportunity there, I think.
What's the biggest lesson you've learned from building a global advisory business across multiple markets?
I think it's cultural nuance, I think, which is, I think, any global business would say the same, is that things are done differently in different markets, and just being aware of that, being respectful of that, and ensuring that you understand that's how some things are done sometimes. And there's very different cultures and very different levels of information as well. The US, for example, probably has one of the most advanced knowledge of what's going on in the market in terms of tech. Some of the other markets less, but might have something in a certain vertical. So it's just making sure to take account.
From this cultural standpoint, where is easier for you and where is harder for you to make business?
I don't think it's necessarily harder or easier. Obviously, it's easier in Australia because they're very local. But I think it's just, I say it's just different. Some countries, they want to go things very methodically and then they go very fast. Some want to go very fast and then kind of that agile project management, you figure out things as you go. So I wouldn't say it's necessarily easier or harder. And I've got massive respect for a lot of the people we work with, because often it's their second language, right? And you're dealing with sometimes quite complex things, and to be able to speak about that in a non-native or non-English speaking native language, I think is fantastic. So I would say it's harder or easier. It's just, you're just going to be aware of it.
You have to adapt and to find the right approach, even for your business, not for the client business. If you could give one piece of advice to real estate leaders that are starting their digital journey today, what would it be?
I think most are now, but just to reiterate to some, is the realism, is that a lot of this there's a fine line between definite returns and exploratory. And be prepared to go on that journey. But there is a lot of value there and a lot of text. And there's also not just one way to do it, there's multiple ways to do it. So just commit to that exploration process. I think it's the main thing I would say. And also to note that the ecosystem or the sector has moved massively where it was from 5 years ago. It's much more advanced from a technology perspective, and some of the results are fantastic. Be sure to have a look.
One advice for your younger self?
Probably eat less would be one. No, I don't really know. I'm quite happy with where we're at and the learnings we've had.
But this is a good one. Never heard it in the interview, so that's a good one. I'll remember this one. And works for me also. So we're almost at the end. I have two more questions. One is, if you follow somebody for insights in this PropTech venture capital or real estate in the industry, if it's a podcast, magazine, or somebody from the industry, who do you follow personally?
I'd have to say us. Usually we do something every week. I think we've got the biggest LinkedIn newsletter on real estate with PropTech globally. We do insights every week. We publish something on our website every month as well. We do a quarterly report on key subjects. It's actually us. We do a lot of our own stuff. So that's it. That's the main one I would say.
Great one. So a good recommendation. I have to follow you as well to see exactly. And finally, who would you recommend as a future guest on this podcast on DT Vector, and why?
I always find somebody like Anthony Slumbers very interesting. He's got some great views, particularly around AI.
Was here actually.
He's famous. Okay.
Yeah, he's been great guy. Great.
Yeah, he's got very good views. There is actually quite a few, but I can't think of anyone off the top of my head. But I will come back to you and give you a couple of names of people I think worthwhile, because there's quite a lot of people in this space, right?
Yeah. Thank you for that. Actually, my colleagues had a good discussion with your colleague Stuart, and they said he's actually a good guy, and they had an interesting conversation. Thank you, Stephen, for coming to the podcast, and actually a lot of great insights that you can see in the market, but not as you presented it from this global perspective. We have to follow what you're doing and to learn more about that. Once again, thanks for coming to the podcast.
Problem, and thank you very much for having me.
Yeah. So for the rest of you guys, thanks for watching. Until next time, I'm Eugen Ursu. This is DT Vector, the platform that is connecting the dots of the build world. Bye-bye.